Good afternoon. It is April 6th, 2026. This is this week's Clubhouse Insider. Getting a late start of the day because activity has really been picking up in the market. We're seeing people go against multiple offers. If homes are priced well, they're getting a lot of activity. Even though I'm about to start talking about volatility, we've seen the dip in rates just a little bit really bring people back into the fold and off of the fence. So it can be an exciting time. There can be a little bit more competition, but at the same time, we just have to be careful and really make sure inspections are going well. We're seeing more and more contracts drop out. I would say the dropout rate is getting higher and higher because of that deferred maintenance I'm always talking about. As a seller, you cannot expect to not take care of a home for multiple years and then just have the buyer pay for it. It's going to come out in inspections and people are going to move on. They're going to find a different home. So there are more contracts. There's more activity, even some multiple offers. However, there are other factors hitting the market as well. So make sure we pay attention. If you're in the market and you have questions, good deal, bad deal, what's the process look like, inspections, no inspections, what should I look at? Let us know. We're here to help. And so as far as the markets are concerned, rates did dip recently, right? To start the year, we really started to see a lot of good momentum. And then obviously big global uncertainty, inflation, the situation in Iran is not helping. So it's all tied to energy and geopolitical tension that's putting pressure on the bond market, which is what moves mortgage rates. So over the next couple of weeks, we've got Fed minutes this week. At the end of the month, we've got a Fed meeting, which they'll let us know if there's any change to the interest rates. So the Fed meetings minutes this week, that could tell us where policy might go next, what they're talking about internally. Then you've got the inflation report, CPI, PPI, PCE, plus there's the jobs report. So all of these things play a major role in where rates head from here. And of course, what's going to happen with this Strait of Hormuz? All eyes are over there on the Middle East with oil. And so this is why timing the market is so tough. Just a few weeks ago, we're near some of the best levels we've seen. And then we've already moved off of that back to kind of what we've gotten used to. So if you're in the market for refinancing, get prepared now, strike when the iron's hot, and can't be too greedy like you're sitting on a blackjack table on a 3 or 4 hand run, thinking that you're not going to lose the rest of the night. So you're going to have ups and downs. So the other trends I'd like to keep mentioning every time I do anything is high consumer debt and lower credit scores that we're seeing in applications. So if you are waiting or trying to time the market or your situation just dictates, hey, I got to wait a little bit, I got X, Y, and Z to fall into place first, then this is a good time to clean up debt, improve your credit, and get your numbers dialed in, because those are the factors that matters even more than just rate movement from day to day or week to week. So we'll watch the data over the next couple weeks, but here's the levels that we stand right now. You know, we're looking at just under 6.5 for conventional, and FHA and VA are still holding strong in the 5s, but they are a little bit higher. We saw some positive movement today so far to open up the week. So we'll keep watching. Let us know what we can do to help you. I've had a couple people actually say that they are following along. So please comment, mention something. Let us know you're there, what you want to hear about, and we will be here to educate. Have a great week, everyone.